I don't know any AI founders that are AIs that I've invested in that are actually the partners on the cap table, that until we get to that point, it's still people that are making or breaking these companies. And so, I still look at scalable intelligence as how scalable is your team to take this to fruition? Is it just you as a coder that's never done anything? Have you bolted on, all the right pieces? And that's scalable intelligence to me is, do you have the intelligence to scale through something? Now, scalable intelligence from an AI perspective, scaling up the coding and things of that sort. I think the scalability factors in these companies, so we even have a segment in our fund where we've carved off a big portion of that for one-time investment exits, right? So if that in itself should tell you that there's not going to be as many multi-stage 10, 12-year exits as there has been traditionally over the last 20 years.
Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Welcome back to the show. I'm your host, Ankur Patel, and today I have a special guest, Austin Moss, who's an entrepreneur, former operator, and a venture investor. Austin, welcome to the show.
Thanks for having me, Ankur. Appreciate it.
So could you tell us a little bit more about your background and your journey that took you to what you're doing today?
Yeah, there's a lot in there, but I'll kind of condense it. But yeah, I've always been an entrepreneur, even out of school. Started my first company at 17 and started multiple companies since then. A lot of them failed, a couple succeeded. And, I learned a lot through all that though. And so currently run 7 different companies. So a lot of them in personal investments, venture capital firm, alternative lending, and then a lot in the medical and fintech space.
Amazing. And what lens do you think that provides as an investor, right? Because most investors, I don't want to say most, but I would say many investors, they've done investing as a profession. They may not have been on the other side, which is founding businesses or operating businesses, being kind of on the other end of things. How does that lens and perspective help inform what you do on the investment side?
Yeah, I think there's 2 different types of entrepreneurs, right? I know some guys and work with some family offices where the patriarch had one vertical, one industry for 60, 70 years and exited. That's different than, say, somebody that started a company a few years ago, right? And then maybe they started something at a different vertical. So there's 2 types of operators there, right? There's operators that are just seeing what they've done and didn't have to go figure a lot out. And then there's operators who had to go figure everything out, right? But they're still siloed into knowing what they do best, right? Mm-hmm. And then you have, once they get into investing, right? So you go exit a company or you've just been investing smaller, right? You don't really see the wide gamut of what can and can't go wrong. You know what can and can't go wrong in your current and what you've invested in the past and what your businesses you've operated. But to get a zoomed out view, you really need somebody who's seen thousands of businesses and seen what makes them fail and what makes them succeed. And I kind of got lucky just being in the alternative finance space for 15 years where I saw thousands of businesses trying to get capital from a debt perspective and being able to review those financials and strategize with them to where I could see and understand that over, almost 2 decades, what hurts them, what makes me leery of them. And it's sometimes intangible stuff. Some of those things are the financials look what they look like, but these 2 operators, I would invest in this one and not this one because they have the same financials, but that person in general, how they make decisions, who they are, are they going to be able to have the fortitude? Do they work with people well? All those things are just as important, but they're a lot harder to measure. And so I think you need a wide array of all of it and good people around you that fill in the gaps, right?
That makes a ton of sense, Austin. I think, as a later stage investor or public markets investor, you can go and base more of this on metrics. But as an early stage investor, there are a lot of qualitative things around people and the founder and mission at large that cannot be quantifiable, right? Or harder to go and put into metrics. And so I think that experience as an operator, I imagine, is very helpful picking out like which founding teams are going to make it or not, right? I think that's critical. So that makes a lot of sense. To be honest, I think that's also true now more so than ever around late stage and public companies. Like, who's at the helm? Like, do they have a pulse on what's happening with AI? How aggressive are they in reinventing their business model? Just given how quickly AI is kind of changing even the business of, for example, the Magnificent Seven and other companies. So yeah, it'll be very interesting to see sort of how that operator lens helps inform some of the things you invest in over time as well.
Yeah, exactly. And you need that same lens from every stage, right? You need that operator that takes it from 0 to, 10 million or a million, right? And then you may have somebody different. And is that person able to be the 0 to 10 and the 10 to 100? Or do you need to sub somebody in? And if you have to sub somebody in, is that original founder, CEO have too much of an ego to be able to look at the main objective for everybody and not just themselves, right? So there's all these little nuances that come into play, even at every stage too. But yeah, you're right. On that first stage, understanding you don't have data most times to look back at, right? Like you would in later stages, A, B, C stage, exit, IPO.
Well, I guess maybe picking up on the AI theme here in some ways, when did you first see inflection point in venture investors getting really heavily invested on AI? And then maybe if you could help break down how that AI investment theme has played out last, let's say, 2 odd years, how things are shaping up today versus 1 or 2 years ago.
Yeah, from my perspective, I was a lot more on the deploying capital on the debt side 2 years ago, and that's transitioned pretty heavily into VC about the same as it was then. It's almost flip-flopped, right? Because the debt markets have kind of reversed where VC has superseded. And so not that I jump from one thing to the next, but, I've kind of played in the angel, smaller markets, prior to the last couple of years. And so seeing that transition, at first it was you couldn't really put too much money behind that solely, right? AI solely. I think that's transitioned where it's like, okay, your AI is helping you, or you're doing a wrapper on ChatGPT. That used to be what was interesting, right? But you're still trying to understand the IP and who owns it and where's the data and, SOC 2 and being able to do that outside of riding on somebody else's, coattails for all this, compliance and due diligence pieces. And now that's almost some more of the front end checks on these AI companies is, all right, if you're going to be an enterprise level, how much do you understand what's necessary from a compliance and privacy and data standpoint versus just what it can do? Because we know there's a lot of things that it can do. And there's things we haven't even thought of. But until you get there, do you know, the brass tacks, like what's the common things that an AI or tech company need? Because you have a lot of people out there just building stuff that have never built apps or developed products or code for other things. And so they don't know exactly what that looks like, right? As far as a business goes. And so they can code and develop a lot of cool stuff now quicker. So it's weeding through a lot of that of, does this person still have the competency to run a business?
Yeah, I think you need so many things to work well to build a really great AI company these days. First, as you mentioned, like, can you sell into a segment that's regulated? So do you understand the compliance, security, governance, and things like that? But then it's also, do you understand that space that you're selling into, the customer base, what their pain points are, their needs are? If you don't have that, you could get people around you to help inform that. You could do more of that through customer discovery, but doing that well really does matter, because it's not just slapping on AI to what used to be. You have to reimagine new products, experiences altogether, right? In ways that require like pioneering new territory. I remember 2 years ago, it was all about, let's just take what we see with ChatGPT and make an enterprise version of it, like do RAG and such. And there are some legs. I mean, there's still some companies that do that as their primary business, but more and more of that is just kind of a given, right? That's just an experience. You're putting some context together with a chat first experience, and then you have the rails for that, and you can deliver that. But then it's like, how do you drive deeper adoption, deeper value? Where do you go there next? Particularly with like things like AI agents and such. So yeah, it's been fascinating to see that journey and a couple of inflection points. It feels like as soon as you build one thing, the markets kind of move, and they're trying to build out and solve for the next problem, right? So it's constantly this like game of cat and mouse around venture investors investing in startups and startup founders building, with what the customers in the end need from the products themselves.
Can I ask you a question?
Yeah, please.
I'm curious to get your opinion on, so, in VC or any investment, right, is how far is your competition behind you? What are your moats that you're creating? I think to your point, like a lot of the misunderstanding is how, the scary part with AI is how quick things move, right? So creating moats around your business to keep competitors away long enough for you to succeed. What are you seeing in AI as far as what are good ways of building moats for that specific use case?
Yeah, so I think a couple of things. One, I think moats are really, really non-existent. And I don't mean just for startups. I even mean for like the Magnificent Seven, right? Like Google with search, their moat gets weaker because AI is so disruptive. So I think one kind of going back to your question, as a startup, your moat is going to be fairly weak from day one. Now you can build stronger moats and you have to, but one of the biggest things you could do to build a moat is speed. So how quickly do you start understanding customer? How well do you build your brand and those customer relationships, which ends up being a moat in itself, the go-to-market moat, the fact that you've built trust and rapport and you understand the customer and you built with their needs in mind. So I think the go-to-market moat, I think, is pivotal. And in order to do the go-to-market moat, you need to be really fast with how you build those relationships and also the experiences that you deliver through the product or the platform that you build. But I will say the shelf life of a product by itself is very little, right? So, and I think one of the things that really matters right now is like your ability to copy what others are doing that you see as being very valuable. And of course, pioneering new things, but copying is also very valuable, particularly if you take it from adjacent domains, right? But the important thing is like, no matter what product you have, that product, if it does not improve, you have a shelf life that's under 12 months, right? So the technology, the product moat isn't there unless you go and build something that's more durable. And some of that comes from relationships, the brand, how much value are you delivering to customers that are slow to buy, but once they buy, like as long as you do a great job and continue to understand what their pain points are and deliver on it, you will be sticky as a result. But speed matters. So what I mean by that is like the go-to-market mode is one thing, but the other one is like how quickly do you innovate on your product so that it is then end cycles above and better than new players that see the market opportunity, but maybe are just too slow in getting there and don't have existing relationships. And I think our moat gets deeper over time, but initially like day one, right? Like 2 years ago, we didn't have any moat. Now we do have a little bit more of a moat. We continue to invest in that moat, but is it such a deep moat that we can fend off competition without like just crazy speed focus? No, like that moat is not that durable. And it's not just true for us. I just mean generally, broadly speaking, because AI is so disruptive, you just have to build with that perspective in mind.
Yeah, no, that makes a lot of sense.
One of the things that I'm curious about here are, now, how do you kind of move in a super fast landscape? So I imagine you speak with a lot of startups. Many of them might have similar ideas because it feels like in any category, there's so many companies that are cropping up. In some ways, it's how people would describe the age of the internet. It's like you have dozens, hundreds of startups kind of in the same category. Hard to know who's going to win. Hard to know like which horse to back, especially when you don't have a lot of metrics because it's so early days. And how do you go about building conviction in opportunities that you see?
Well, the first litmus is the founder, right? Because that applies true whether you have AI or you're building widgets 50 years ago, right? Do they have the competency? Do they know what they're doing? Are they going to mess it up, right? Do they know how to build teams? Do they know, how to manage people, work with people? Are they willing to have the ego to step aside into the role that they are best for and let the right person fall into that role? So I think you're always looking at that. From us personally, past exit founders, right? So if you've had one of your main co-founding team members or yourself has had a past exit, that gets you in the door, right? Another big litmus for us is I like to see AI combined with another business, right? Like either a company, a corporation building AI into a vertical that can then be relicensed back out. That's really interesting to me right now, right? So either big corporations with tech that they have somebody to go in and run that AI vertical, but they're at least able to test it in real world scenarios, right? There's a lot of AI being built that's just AI stuff inside of it that doesn't really mean a lot. You got to show that value and create it. But I think it's so broad and moving so quick, right? Like just building something general, I don't think is the right way right now. I think building specific to very specific use cases and then be the best at that, because then you really have a moat. I mean, I feel you really have a moat there, right? Because you have an expert probably as a partner in that vertical. Those are the best companies I'm seeing in AI that are getting the biggest lift and the most attention, right? I almost see this, if you don't have that you're just falling into a pool that's like, let's wait and see, because everyone's building something like this, or they will tomorrow, right? Yeah. You think if you can stick into a vertical, like, so example, we're looking, one of the companies in our incubator, that's the other litmus, post-revenue, right? So multiple, past exit and post-revenue. A lot of people care about $500,000, 200. We don't care. We just want to have post-revenue, showing that somebody had bought something from you and you knew how to go through whatever it took to get to that. Because whatever it took to get to that is a lot of check boxes. So yeah, I think those are some of the main things we're looking at to kind of rise to the top right now and stand out to get capital or, market share.
Yeah, that makes a lot of sense. I mean, I think you want to check off a couple of boxes because they de-risk the opportunity, right? So prior exit, revenue, like I think all those things help like stand apart from the pack. And then I think having a very, I don't want to say unique, but certainly a very like deep read of the market. So you have that domain expertise to go and inform how you build a company. Because that gives you, it's like inside baseball, you kind of have a deep understanding and empathy with the customer already. You build with that in mind. So you need less signals to go and have conviction and design the right roadmap properly and figure out how to like take what used to exist because you know it deeply and then figure out value that AI could unlock and build that with in mind, right? So you're like solving for the core pain that you have experienced in your own bones, right? I think that makes a huge difference. So I think that certainly helps. When you think about, on the one hand, venture investors feels like there's a lot of capital in the segment, right? Broadly speaking. So obviously you have the multi-stage firms raising massive amounts of capital. You still have many funds that have raised rounds, that have raised recent rounds. So it seems like there was a lot of capital. Some of it may be locked away in late stage investment opportunities that maybe finally are thawing in the sense that you have IPOs, you have mergers. And so a lot of that liquidity is now going to fund back into the system. And how do you think about the availability of capital relative to the need for startups to have capital? And it feels like in some ways, there's a lot more capital chasing a fewer set of really, really standout opportunities. And the standout opportunities, in some ways, their need to raise is maybe less as well if they could command a lot of revenue right earlier on. So more capital efficient businesses on one hand, while there is maybe a large pool of capital on the other hand. I'm curious if you share that sentiment, if you disagree with it. I mean, this is more broadly like drawing upon anecdotally what others have said about this space here.
I mean, I think in general, again, you see these big check sizes and these big funds, but you got to realize they're doing a lot more than venture, right? I mean, they're bringing in, becoming RIAs and wealth management firms inside those same $1 billion numbers you're seeing everywhere. And it's really, I mean, I see that almost, I've always invested well outside of the stock market when it comes to my own personal investments, right? So I like to look at things from, what is my access though, right? And what's reality? I mean, all the news and all that stuff can be one thing, but you got to get to like, where's your level? And I think when you're looking at these funds that are 25, 50, 75, $100 million funds, that hasn't changed from getting, I feel like that's still about where it's at. Yeah, there's a lot of capital, but for the right people coming into that, right? I don't think there's a lack of capital by any means for that subset. I think it's just getting in front of the right firm that has the right, what are you building? Are you aligned with that firm? It's really a matching thing. I feel like at this point for those pre-seed, seed, really for that seed and A, you just have to find the right firm that's aligned with what you're building. But I think once you get into that BCD, that's when you're starting, it starts to get a lot more competitive as far as where that dollar is going to go. It's easy to spread 500 grand out a lot of different places. It's a lot harder to spread 150 million out a lot of different places, right? I don't care how big these funds get, they still are. I wouldn't say that just because you see these big numbers that it's all VC or VC for you. I would almost ignore that and treat it as it is now. Yeah, there's more money in it and it's going to get more attention over the next 5 to 10 years because of that. But I think in today's current standpoint, you still got to do the same thing. You can't just like go throw out a pitch deck and assume that you're going to get your raise done.
Yeah.
Especially without revenue. Now with revenue, that's where you can kind of you have leverage, right? Because you're seeing a lot of these companies that don't have the competency to scale to revenue. And so if you hit revenue with an AI company only, say you are a generalist AI company, it starts to be more interesting. But pre-seed AI only with no other vertical tied to it is a very noisy market right now.
Yep. That makes a lot of sense. And I think it'll be interesting to see, like, can startups scale more capital efficiently, or is this a land grab and capital, like burning capital is very critical. I think you're seeing some of the swings kind of go back and forth, but 21 was like burn capital as quickly as possible, scale as quickly as possible. I think then in recent years has been kind of maybe preferential treatment to businesses that can run more capital efficiently, be less cash hungry, but these pendulums swing. So it'll be interesting to sort of how that plays out over time.
I think the biggest thing I've seen, like we have a company right now doing some dental prosthetics tech using AI, but it's a kind of that similar scenario, right? It's a dental lab who had a problem and they're very smart and they've exited before and they understand AI. And they're like, this is not just for us. This is a whole business in itself. And we have the resources to do everything behind the scenes, and de-risk it for ourselves. And then it will go raise money on its own. But finding that unique selling proposition, who's going to pay you? How are they going to pay you? There's a lot of cool stuff out there, but there's not a lot of cool stuff out there that's making money for VC.
Yeah, no, that makes a lot of sense. Maybe switching gears here a little bit, though, what are the implications of companies staying private for longer for both the founders, employees, of course, that have stock, and then investors?
You're saying why do I think it's staying longer? Why are companies staying longer before exit?
Well, I mean, that could be one of it, but really the implications, right? Basically, you don't have that liquidity return for founders, employees, as well as investors. I mean, there are secondaries and such, but just curious, like, what kind of knock-on effects do you think that has for the larger landscape?
Yeah, I mean, I think in general, you have companies that aren't exiting in that 7 to tier. I mean, a typical VC fund's a 7 to 10 year fund, right? You invest in the first 4 years, whatever, 5 years, do some follow on, and then you need that company to exit ideally in year 10. Now you can extend that fund out usually pretty easily a year or two, but what do you do after that? And the company has not gone IPO, which has forced you to have an exit, right? And that company is just staying there because they're growing. They don't, we don't know what's coming yet, right? So you're taking a big risk, but some of these companies are so big that these LPs are in that they're getting dividends. It's, it's scaling every year quicker. Why IPO? Well, we're in a good spot. We don't want other people to come in and dictate what we do or not do. And so I think you have the combination of both of, they don't need to exit. They don't need to go IPO. And so you do see a little more secondary in those larger companies. But I think in general, you'll start to see more of it because they want to redeploy capital and they don't want capital sitting there in something that's stagnant. And if you think about it, like if you're an AI company and you've been around for 4, 5, 6 years and you haven't done what you're going to do in the last year, you're probably not going to be doing it, or it's going to take longer than you thought. So they'd rather go refresh that capital in somewhere that they could see something quicker, right? It's all velocity. Time kills your returns real quickly. And that's the one thing that you have control over. And so if you can take back the control, that's where a lot of them are trying to see, where can I take back control? Which is why you see private equity, scaling up just as well, because you don't have that question is no longer a concern. So why do you see family office capital? I think it went up like 5% last year. Private equity did, as far as an allocation for VCs, because they have more. They can have control. It's still going into equities, but just in a different regard to where they can dictate when it exits. easier.
Yeah, there's a better match for the time horizon, right? And it's interesting because I think you're seeing some of the more, it used to be IPO, right? Yet, or you had to be bought by another major company. But I think private equity has been a really good source of return for venture investors as a means to exit the market, right? And you're seeing roll-ups and all these things. And I think some private equity groups are taking like an AI first lens as well, which is, can they acquire companies that are really good businesses, maybe software businesses, but traditional software? And can they figure out ways to create an AI in a native version? Well, it wouldn't be native, but like an AI first play of what they used to be doing. And so you could unlock more margin expansion, margin capture. So I'm curious what your thoughts are there, because like that's becoming a big playbook, potentially also a form of liquidity for venture investors, right? Because they could exit businesses to private equity. They're going through that motion.
Yeah, no, I mean, I think, like I said initially, the thing I love in venture is if you have a corporate sponsor, however you get that larger enterprise, traditional business in manufacturer, distributor, space, it could be oil or gas or land. I mean, it's endless, the amount of companies that we have not seen in venture that are now coming back around, because any company is now appealing to venture depending on what innovation and AI you're building within it, right? Or what other new products have you figured out? And a lot of times they may stand alone, right? Because it's such a wide open market for new stuff for every vertical that we haven't seen yet. And so they don't want to miss the mark either, right? I mean, if they're big enough, they'll just keep it internal. But a lot of these are middle market. They're building something with an AI expert team that could have been internal or external, but they know what they want to build. They don't know how to build it, right? So they need to bring that in. And that's where they spin off a new corporation and let's build that IP under there and license that out. You're seeing a lot of that. But the nice thing about it is you can be the guinea pig for your own product and know when you go to market, you're going to market. You're not testing, you're not doing pilots, you're not doing any of that. And you may even have enough close partners that you could have done multiple iterations of testing and market, sentiment and all that before you ever go live and anyone ever hears about you. And you don't have to raise money at that stage. That's the secret sauce with corporate enterprise backed, is that you're not out there. When you want to talk about a moat, that's a moat, right? If you don't have to go to the market for VC and you just can build it corporate sponsored and then go to VC once you're 5 steps ahead of everything else they're looking at. That's a cool thing if you can get your company to that point as an AI tool.
Yeah, no, I think that's right. I think that's right. It's interesting, like that could be a huge enabler for strategics and corporates to get a like inside read on what's valuable and then decide what to do with that company, right?
Because otherwise you're just guessing, right?
Yep,
I mean, you build this AI thing, if it's not generalist and for a fact it's better than something else, that's the hard part. You don't know what people are building internal. Because just as much as a moat you can create for yourself, it's just as scary for yourself if you don't have that moat and you're building, because people are building behind the scenes way further along than what you are. And that's what's scary about a VC too, is we know that there's stuff being built over here that could easily supersede our investment or could be one of our investments, but where do you balance your capital, right? And that's something to think about from a VC perspective that we're all constantly looking at.
Yeah. How are you leveraging AI for due diligence at Black?
A lot more on the front end. Like we still want to get our hands on it, and talk to the right founders, but we're more gathering the data and sifting through the data to prioritize using AI than we are making decisions necessarily, right? So we're still talking to all the right people, because that one founder litmus piece that I think supersedes a lot of things we haven't really found a way to vet that with AI comfortably enough to where I'm not going to kick somebody out that was like the perfect person that like they just answered a question the wrong way, or their data isn't right or whatever. That's not a reason to kill it. And I think playing in both the debt and equity markets, like a lot easier on the debt side to do debt or think not VC or PE, but if any other kind of equity. But it's a lot easier to use AI for automation and decisioning on the debt side when it's all systematic than when the way we look at things, which is maybe a little intangible, when you look at a founder.
But what about, let's say, a data room with documents around, it could be financials, maybe video calls that they've done with customers or prospects, maybe if they're using that to build conviction. It could be things like order forms, maybe collateral that they've loaded in around what their vision is. pitch decks that they have. I'm curious if you're using any tooling or you've thought about using any tooling to help synthesize, summarize, identify flags, identify like both good flags and bad flags, right, around that. So it gives you maybe another like systematic way of looking at that information without being so influenced as an individual, right? Potentially, if that's about.
We have some summarizing and some check stuff, but we still manually look through a big bulk of it, right? I mean, there's triggers in there to flag what's important to look at versus what's noise. But again, back to my due diligence days, we like getting things from the source, right? So if we can get that layered in on the source, that's one thing. Because to be honest, what I love about, in the pre-seed seed stage, especially, is having conversations and face-to-face with the founders and not the data, because honestly, 90% of the time, the data is bullshit and created by AI and not by the person, right? So, I mean, the data is there and you need to use it to ask your questions and understand what's going on. But when it's projections or anything like that, using AI is just, better than me probably, is data in, data out, right? So if you're putting in AI data into an engine to decide something that was never created from your actual, what you're deciding on, it makes it really difficult to use AI, as that tool, right? So we're still navigating it. I don't want to say we haven't really built anything that runs on its own in that regard. We're not quite comfortable there yet. But I think getting rid of some of the riffraff or some of the stuff that's too elementary, that they think they're a startup and they built something cool that's a wrapper, but they haven't, the past exits, that's something where we even still look at those. I still talk to those founders, but we have some checks there, right? So stuff that we normally wouldn't look at, I would say we're more so adding AI to bring that back upstream versus taking what we were looking at and killing stuff in it, right? So we're still looking at what we were looking at, but we're getting more opportunities on things that we may not have looked at before, using some certain metrics on, non-exits and past founders, right? So we're not completely against that. We just take a heavier look, and the AI helps us kind of flag some of those before they're even in our system, to be honest with you. So
yeah, no, that's great. It's like a screening tool, right? It allows you to kind of screen more opportunities than you would have had otherwise, because it is pretty hands-on, right? That get involved with in the diligence process. But if you could go and screen for more opportunities, get a bigger pipe, that helps quite a lot, right? Without requiring a huge army of people at the VC to go and source great opportunities. And I imagine that you could use AI to go and understand the category a little bit better, right? What are the comps that you should draw upon? What are things that you're not maybe seeing, that because AI is able to search third-party APIs and web data and such, is able to kind of paint a bigger, deeper picture. So I imagine that the diligence part, at least in terms of background gathering, is also enabled through AI. Am I right?
We use a lot more AI once we like the company. We're going through deal structuring and how do we want to, how is this going to look, and projections for us. What's the market like? What competitor analysis is out there? So we use it a lot more, not so much vetting what information is input, but taking what we want to look at within that data across the market. There's a lot more of that than it is that specific data. We use that data, we find where we're going to look at, whether it's market potential, whether it's that industry's potential, whether the stages that they're at is in line with what the valuations are out there for those other stages currently, right? So we're using more of that on, seeing where we want to go in and where do we have to exit, and quickly analyzing those scenarios is really, de-risking that from a huge amount of data. Once we're past that front end point, we're a lot more comfortable there of fine tuning how we want to help this company, and do they need more than we're asking for, less, and just comparing across the market segments. Yeah. So we're doing it a lot. Yeah.
Yeah. It allows you to get deeper read, right? Scaling up intelligence. So I guess maybe kind of go moving into the next third here. What does scalable intelligence mean to you as an investor?
Scalable intelligence?
Yeah.
I think scalable intelligence is if you I haven't thought about that actually. Scalable intelligence. Because I could see it in both an AI segment and in people, right? Typically I go to people, right? I mean, most businesses, no matter how much tech you have, at least to my knowledge, that I don't know any AI founders that are AIs that I've invested in that are actually the partners on the cap table. That until we get to that point, it's still people that are making or breaking these companies. And so, I still look at scalable intelligence as how scalable is your team to take this to fruition? Is it just you as a coder that's never done anything? Have you bolted on, all the right pieces? And that's scalable intelligence to me is, do you have the intelligence to scale through something? Now, scalable intelligence from an AI perspective, scaling up the coding and things of that sort. I think the scalability factors in these companies, we even have a segment in our fund where we've carved off a big portion of that for one-time investment exits, right? So if that in itself should tell you that there's not going to be as many multi-stage 10, 12-year exits as there has been traditionally over the last 20 years. So you're going to see a lot more of these 24 to 36 month exits one time, because like you said, why do you need multiple stages to prove out multiple type of tech build outs, right? And market adoption. You should already have an MVP and go to market for the most part with minimal capital, depending on what you're building, but you should at least be able to get to that point. So what more are you going to need? You need a go to market set of capital and maybe some acquisition capital, maybe a second round, but I don't think you're going to see a lot in the companies that are getting, seed, pre-seed right now, a 3-4 tiered raise and exit. I think things are just moving too quick and you can prove out stuff quicker too, right? And then even quicker if you have that vertically integrated partner too. So I think just in general, things are moving way quicker than that 7 to 10 year mark. And so when you talk scalable intelligence, that's scalable intelligence already there to a degree, but I think we can get even further if you have that competent team around it. And then you really have a scalable intelligence company, I think.
Yeah, it's interesting to see sort of like how you can build a company quicker than ever before and get to certain size quicker than ever before, right? So a lot of that timeline is getting compressed. Question is, well, then people would kind of stack multiple S curves. So kind of go and build for multiple products. You could kind of go deeper into that value chain, targeting multiple ICPs and such. But I do think that there's consolidation that happens, right? So some startups will just get gobbled up by others or will go out of business. And the ones that continue to kind of push through will get very, very large because they're taking advantage of the very large opportunity that's about to come about because AI is just unlocking new value in ways that we don't even fully know, right? Like early days of the internet and such. So yeah, it'll be really interesting to see. Well, Austin, I think maybe to close out, I'm very curious, where do you see the biggest opportunities for AI native startups in the next 2 years?
I would say the biggest opportunity for those AI native startups, I think you have to segregate yourself from the masses. And so what can you do that's going to segregate yourself? And I think if you segregate yourself from the masses of just being, an AI generalist, you're going to win, right? Because there's so much out there that if you pick something that you believe in and you know how to build in, then you run with that vertical, then you're going to crush it in whatever you do. And I think, there's a lot of competition in the very wide general consumer AI features, right? Because it's not so much that you're not creating a great product in any of these regards. It's the noise around going to market. You can have the most amazing product, but there's lots of amazing things out there. When the iPhone came out, there wasn't like a bunch of amazing things. It was like, yeah, I'm going to go get the iPhone. It's the best thing out right now. Well, you can't say that right now. Like what is the best AI tool to buy? And I mean, that changes every day, every week. And so, once you can get something that's good, that you're like, that's the best, it's going to be hard to do it generally. So I think anyone that can get good at the best in something AI is going to make it, right?
Yep.
And quicker than what you thought. But you just got to get there and move quick,
Yeah, I think that's great advice. You need to know your edge, like what is the kind of angle of attack you want. Your generalist is going to kind of to know your lane and then basically own that lane, compound the gains, right? Move super fast. So when a customer is looking for something that is in that lane, you're going to pop up to the top of the list. But the competition is fierce. It's a phenomenal time to build. I imagine it's a phenomenal time to invest, even though there's both anxiety and excitement.
What did I say? Excited? It's anxious,
that's right.
And it's exciting. Right. But hey, we get into this for the excitement, right? I'm not in it to pad the pocketbook or anything. I mean, I want to help founders and see what their creative abilities are and see what they can build and make and exit and, how sticky they can make it. And yeah, it's exciting. So I appreciate it. Okay.
Yeah, Austin, thanks for being on the show. Loved your insights. Appreciate you sharing these with us.
Yeah. Thank you guys.